Hello everyone and welcome back. My name is Greg Firman, Market Analyst here at TraderPlanet.com, and in this live trading webinar for today we're going to be looking at the E-mini S&P 500, essentially the S&P 500. We're going to be trading it on a CFD basis, but for everybody to see here, it is now Wednesday, January the 13th, 2010 at 10:55 a.m. excuse me. So what we're going to be doing here is I'm going to pull up our live trading platform where we can see the S&P 500 is currently trading at 1135 points right now. So 1135, 1136 is our main price. Now going in looking at VantagePoint software, we're going to be looking for an entry point here. We have our three exponential moving averages, 1136.89, 1132.92, and 1124.30, which is our key level of support in this particular case. Now going into our daily report, we're also going to review that before we get into our entry point to further assist with getting in at a good intraday trade. Now again, the daily report gives predicted high, predicted low. So we've got 1128.21 and 1141.19. However, we can see that the neural index is turned down after a number 6 up days. We've now yesterday VantagePoint for today has predicted a down day on the S&P 500. Now, because we've predicted VantagePoint's predicted the down day, that doesn't mean that the overall trend is reversing. That's not at all what it's saying. Now we can see that we're heavily overbought here on the predicted TSI. However, our predicted MACD is running flat. Predicted RSI still in overbought territory. However, I believe it's still enough to hold. So with that said, I'm going to go back here to our live trading platform. We're trading this on a CFD basis. So I'm going to pull this up so everybody can see that. We're going to stick with the trend. We're going to go into a buy position. Because this is an intraday trade, I'm again going to use 10 contracts. Current market price 1136.20, so I'm going to go ahead, get us in on a buy position. We can see now that we're in that. We're down $100 the CFD because we've taken 10 contracts, of course. But 10 contracts is fine because we have our equity in our demo account is 49,800, so we're well within our marginable region. Within our margin requirements, I should say. So what we're going to do is we're going to monitor this trade throughout the day. We're going to be looking for a move back towards VantagePoint's predicted high of the day. We can see that the S&P 500 here has already hit the predicted high of the day at 1141.80, so a very accurate call on VantagePoint's part there. 1133. I don't believe it's going to get below this level. Now the reason why I'm saying that is I'm going to go back to the VantagePoint chart here for a second. We can see that the 8-day predicted exponential moving average from VantagePoint comes in at 1132.92. So I'm going to get into my buy position here. My stops are going to be below the 1130 area just to be safe. In most cases I would have them below the 1124 area and then not put in as many contracts at once. I would probably average those contracts out throughout the area between 1133 and 1124. But for an intraday trading basis, we're going to put in the 10 contracts and we're going to actually use stops on this trade. So what I'm going to do here is pull this up so everybody can see it. I'm going to put the stop on this trade at about the 1127 area. So hopefully everyone can see that okay. We can see our stop has now been entered, 1127.5. We're in a buy position, 1136.80. Market currently at 1135, down 110. So we'll be back here shortly. We're definitely looking to close this trade out before the end of the day today, preferably within the next hour or two. But we'll see how that works out. But we'll be back here shortly to review that. Okay, we're back here now to check our trade to see where we're at. We can see now that it's still Wednesday, January the 13th, 2010, 11:21 a.m. Our trade is now just turned profitable. We're $40 into the profit here. So again, this is going to be a day trade. We're looking to close this out. Again, a lot of things are based around percentage of account. So if we can pick up $200 to $250, 0.5% of the value of the account on a day trade, that's an excellent trade. As you can see, as we're sitting here, our trade is now up $140. We're going to hold this position. Everything on an intraday trading basis, on a day trading basis, we want to make sure that we calculate a percentage of profit and loss. So we've done that based around our stop and based around our open position and our take profit. So again, we're sitting here 11:22 a.m. Our trade now profitable shortly after we've taken it. We're up $140. We'll be back here shortly again to hopefully close this position out with profit. Okay, everybody, welcome back. We can see now that we're about an hour later into this trade. We now have approximately $490 in profit. 12:09 p.m. Eastern Standard Time. Excuse me, Wednesday, January the 13th, 2010. We can see that we entered into a buy position on the S&P 500 at 1136.8. The market now currently trading 1141.7. So we've taken almost 6 full points out of this market in a very short period of time. So with that $490 profit realized, we're going to go ahead and close this position out. So that's a very nice profit. On our account basis, we've made 1% of the value of the account, just about $500 on a $50,000 account. So a very good trade. Now what I'm going to do is I'm going to go in and do a quick review of what we've done here. Market's gone down. We're using the 8-day predicted exponential moving average from VantagePoint as our entry point. Market has come down, tested that area once, and then started moving higher. As it moved lower, we picked up another position. We bought that position there at the 1135 area. Now, and then we were looking for a move towards VantagePoint's predicted high of the day. This was strictly set up as a day trade again, so we want to make sure, so we added more contracts than maybe what we normally would have if we were just trading on a individual basis. So if we were trading on a not an individual basis, but more on a swing trading type of thing, which we were not doing. Now we have the predicted high from VantagePoint at 1141.19. That's we closed our position out a little bit higher than that. The neural index was pointing down. We used the neural index to tell us that the market was going to move lower. However, when it did, we were going to use that as a buying opportunity. We did not use the predicted low from VantagePoint because essentially 1128 is just basically a calculated area where the market could go to. That doesn't necessarily mean that it will. Now we're still in a very strong uptrend as identified by VantagePoint, so in this particular case that's why we've chosen to use, or I've chosen to use, the 1132.92 area as our buy position. Now we were definitely overbought, but again the market continues to move higher, so essentially what we want to do only is buy on dips. So hopefully this has been helpful, and again, my name is Greg Firman, market analyst here at TraderPlanet.com.